and welcome to another video. This time it's for Americans living and working abroad and how you can minimize your tax bill the right way. So first is we will be laying the foundation. What are the things that you need to know? How you can avoid double taxation and other things where you can reduce your tax bill. So US person must file US tax return on their worldwide income. So this is the most common misconception and mistake that a lot of Americans living and working abroad are facing because they didn't realize that even if they are living abroad, then they still need to file their income tax return in the US. So US is one of the few countries that tax individuals not on their residency but on their citizenship. So US person here means American citizen or green card holder living and working abroad. So must file the US tax return or the 1040 on their worldwide income, not just on their US source income, if any. The other important thing to consider is US person must comply with their foreign assets reporting on an annual basis. So this includes your FBAR, your FinCEN reporting, because non-compliance can result in significant civil penalties starting at $10,000. So that's why it's really very important. So those foreign assets reporting or the FBAR, the FinCEN report generally starts at $10,000 for the threshold. Now, in terms of the deadline, so for Americans living outside the US, well, generally speaking, April 15 is the deadline for the individual tax return filing, and also for the FBAR. That is the same deadline as the FBAR. Now, for Americans living abroad, there's an extension up to June 15. But if you file if you submit an extension to file your tax return, you have until October 15 for your tax filing deadline, and that also extend the FBAR filing date. So how do you reduce your tax bill the right way? First of all is to avoid double taxation. So there are two ways on we can avoid double taxation. The first one is the foreign tax credit calculation. So the foreign tax credit is a non-refundable tax credit for income taxes paid to a foreign government or a foreign country as a result of taxes withheld from your compensation or your wages. The second one is the foreign earned income exclusion. So that is a tax benefit which allows Americans working outside of the US to exclude a portion of their income as a taxable income. So as of the recording of this video, the income exclusion is the first $108,700, and this form you can also claim the foreign housing exclusion. Now the question is which is better for you, right? That's probably the first question you have in mind. Which is better for you? Well, it all depends. The foreign tax credit and the foreign earned income exclusion have different requirements. So foreign tax credit, it only works if you pay the foreign tax. So obviously you can only claim a foreign tax credit if you paid tax on that country that you work or you live on. It can only be applied to foreign taxes paid on foreign source income. It's only for the foreign source income. The foreign earned income exclusion, you must meet either the physical presence test or the bona fide residence test. Bona fide residence test of that country where you live or work. And it can only be applied to earn income like salaries, self-employment, wages, which is different on the foreign tax credit because foreign tax credit, you can claim that for both your earned income like your wages and your passive income like your dividends, capital gain, interest, and so on. So again, the things to keep in mind here is you can avoid double taxation by either using the foreign tax credit or foreign earned income exclusion. But in terms of which is better for you, again, that depends on your particular tax situation. And then lastly, and really very important, is you can reduce your US tax bill by avoiding those penalties, right? So how do you avoid those penalties? Making sure that you file your US income tax return on time, and you also comply with the foreign assets reporting on an annual basis. Those are really very important ways on how you can reduce your tax bill. If you have any other questions, if you have questions on what I have covered here, feel free to contact us.